Hi everyone. Today, let's talk about the stock market, and then we'll hit the markets and see what I'm looking for over the next week, and then we'll look at my results for the day and positions going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So for the markets, there really wasn't much specifically worth going over today. Sam Bankman-Friedman stepped down of FTX. Disney is going to start freezing hiring and cutting jobs. Now, Elon is saying that Twitter might go bankrupt and that he's having to sell some Tesla shares to keep it afloat, which is pretty interesting. He's saying that advertisers aren't flocking to Twitter, and really advertisers across the market are not investing as much as they were during COVID or anywhere after that. Overall, though, basically everyone's saying the market's up, and there's not a lot going on. Russia continues to back down. The Biden administration is stopping applications for student loan forgiveness as they wait to see if that's constitutional. But otherwise, it's pretty quiet out there, which is good for the markets, and basically everything is up. Moving over to the S&P 500 here on the weekly chart, it's good to look at things on a bigger scale at least every once in a while to see where you're at. Overall, the S&P 500 is down about 16% here year to date. Before this last week, we were down about 20.5%. So this week has definitely been helpful. We're still hovering right around that 144 EMA here on the weekly chart, which has been support several times in the past. It's hard to say exactly where we're going to go. Are we going to hit this resistance line up here at 410 and then bounce back off that and make some more lows, or at least go sideways from there? I would say sideways is at least possible, if not likely. I don't think we're going to break through this resistance and continue up and make new highs and start a new bull trend. It just doesn't seem likely with the trajectory that the Fed is still on, and we're still looking at a recession sometime next year. Of course, weeks like this are very exciting. But that doesn't mean that this is going to shift the balance of power in favor of the bulls here on the short term. So moving down to the 4-hour chart here, you can see we have that 410 range. If we get up to here, I would expect this to fail, and then come back down and retest something like these highs here at 388 or so. And then some more sideways price action from there. Again, I'm not predicting that this is going to break this upper resistance and continue higher indefinitely. Moving over to the NASDAQ, you can see we're down about 28% year to date, so quite a lot, and quite a bit more than the S&P 500. And this last week has been a rally of about 8% here in the NASDAQ, so we were down quite a bit more than that, closer to 33.5%. And again, similar premise here. I think we get up to 300 at the highs, at least in the short term, maybe not even make it there, maybe a couple of points higher next week. Then I would anticipate we at least come back and retest this midline on this downtrend that we've established, somewhere in that 270 price range going into maybe 2 weeks from now. Moving over to the Russell, not quite the same story. It actually peaked back here in November and then came down. So year to date starts here at 224, and then we're down about 16.5%, so very similar to the S&Ps, basically flat in comparison. And before this week, we were down almost 20% on the year, and at the lows, we were about 27%. So again, maybe we hit this 55 EMA here at 194.58, maybe 195, or we hit resistance up here at 207, which I think is not likely. That's pretty high. More likely, I think we get into this range here and come back and retest down here at 180. Compared to recent history here on the Russell, we are in a more reasonable price range compared to the other major indices, and I think that's why we've outperformed here in the recent term. But that doesn't mean that this is going to go to the moon or that this is going to go up indefinitely. Realistically, 203 is probably the highs before we get a bounce back down to this support level around 180, 181. Looking at ratios, the NASDAQ is catching up with the Russell, and the Russell is flat versus the S&P, so the NASDAQ is outperforming more recently. But it looks kind of weak. It gaps up and then fades and then gaps up and then fades. It's interesting to see, and it's hard to trade off of that, but the NASDAQ is outperforming at least in the short term, and it's getting back into this previous range, and you could probably expect it to outperform at least for a few more weeks. This is the daily chart, so you could certainly anticipate maybe another week or two of outperformance before we hit resistance up here. Moving over to AMD on the daily chart, let's see where we're at. Start of the year, we're down about 50%. This is a stock I like quite a bit, and it really has gained quite a lot over the past 2 days, about 20% in 2 days. So it's down 50% now. It was down more 2 days ago. But you're certainly at some resistance here at $72. Wouldn't expect it to go much higher than $82, similar to a rally we saw over here. This is definitely extended in the short term. If we do get a bump up to $82, I certainly would expect it to come back down to $72 shortly after. And then hopefully we get some sideways price action from there. For top gainers, we have DocuSign was up about 15% today. Very, very strong performance. Of course, the stock is down from $320, so about 83% from its highs. Very beaten down stock, but certainly showing some life here recently. Wouldn't surprise me if this is a bottoming formation, around $40 to $45. The stock is at 53 now. Again, if we get up to the 144 EMA at around $64, I would expect this to stall out and then retrace back down to some of these previous prices, maybe $56 or $50 here on DocuSign. Moving over to ARK Innovation, the stock topped out at around 157, down about 75%. The stock really began fading long before the start of the year. So if you go to the start of the year here around here, we're about 58% off of the highs. And of course, we had a big rally the last couple of days, up about 25%, looking for a price target of around $42.77, $43. And I would expect it to stall out around there. Then you'd have a pretty solid range between $43 and $35 to trade this in. And hopefully we continue to get support down here at $35. But otherwise, big gainer today, ARK Innovation or ARKK. Moving over to the dollar on the 4-hour chart, continuing to just knife its way through all of these support levels, all the way down to prices we saw here in August of 22 and back here in July of 22. In terms of next price target, maybe 104.75. Similar prices to the highs here in June and the lows here in August. I don't think this is going to go down forever, and it is starting to get pretty oversold. Certainly would expect a retrace, maybe back up to this level here at 108. And then hopefully a continuation down from there. There's certainly some resistance up here at 107 as well. Just depends on how oversold it is. And if we continue to downtrend through mid-November, up to the Fed meeting in December, and they do 50 basis points, I would expect this to stabilize, not continue down as aggressively as it's going right now. Looking at JNK, continues to rally, big up move again. Hopefully we break back into this range. Back up to around $92. That would be very strong for JNK, and that's good for growth. Big up days like this are good for growth. Means that we're starting to invest more in risky things and start to seek returns and higher yielding things like junk bonds. And that's what we're really seeing in the market today. Growth is outperforming really strongly, and the markets are going up overall, but not as much as growth. Looking at TLT, and this is really where I'm getting some hesitancy. You can see TLT had a big day yesterday and really didn't do much at all today. It actually went down slightly. It's at $97.89, really stalling out at that 144 EMA. And it looks like we're going to go sideways and maybe come back down and retest like $95 or $96 in this price range. And hopefully we get a bounce from there and a little bit of a continuation up. But it's definitely overextended here. We got the overextended yesterday, did fade a little bit today here on RSI, and the momentum is slowing down as well. So keep that in mind as you are trading stocks, especially if you're trading short puts like I do. Finishing up with the VIX, you can see we are definitely extended now, getting into oversold territory on the RSI. I will say the MACD is accelerating once again. We have decent separation here on the EMAs on the MACD as well. Not really at a level of support. We had some choppy price action back here in April, just below these lows here in September. But you could certainly see this going down to around 21, if not 20 or 19 here in this range. But definitely keep an eye on this. We did have a slight gap up and then it sold off again. But I would not be surprised to get at least some kind of a reversal on volatility going into next week. In terms of results, I made money, not a lot of money, just a little bit, because I am pretty hesitant. 2 big bull days like that in a row, not super common. I know the CPI data was strong and everyone's pretty hyped on that. And I do have some positions going into next week. I'm not completely out of the markets, but I'm just not all the way in. I'm concerned that we're going to get at least a solid retrace and we'll get an opportunity to re-enter this trade. I just don't think we're going to power through all of the resistance we have overhead and that we'll get some more opportunities to re-enter the market at better prices. Otherwise, you can see I'm starting to trade some AMD here on my IRA. I do like this stock and it seems to be doing quite well. And really, on the weekly options here, I can get pretty decent prices to get back into AMD at $67 for about 50 cents or a 1% return on that money, while still protecting myself from about a 1% down move. Also, I have IWM down here at 183, and that is for Wednesday, a little bit shorter expiration there. But I got about 87 cents on that, so it's a couple percentage points lower than we are for 87 cents. And then I have 2 positions here on the Qs, one for Monday at 77 cents, at about 2% lower than we're at right now, and then $1 here at 280, at about $8 lower than we are right now. If we do get some good opportunities into next week, a little bit of a down move and some slowing momentum on that down move, it looks like we're going to move back higher. That's what I will be re-entering the markets a little bit more aggressively. But 2 big up days like this is just a little bit hard to trade the way that I trade. Just to put my returns into context, you can see down almost $200 on my IRA, almost $14,000 here on my taxable account. So if I hadn't lost any money, I'd be at almost $107,000. So my returns for the year are just short of 13.5%. So I'm actually outperforming all of the major indices this year, with the S&Ps being down over 16% and the NASDAQ being down around 28%. And if you've been watching the channel for a while, you know I trade almost exclusively the NASDAQ. So that's why most of the losses are here. And even with that, I've lost about 10% less than the NASDAQ overall and doing very well here in my IRA. So in terms of trading, I'm willing to accept some lesser gains when the market is going parabolic the way that it is right now in order to protect myself from the losses that we've seen this year. If the market continues to do things like this, then I can adjust my trading strategy. But right now, I'm pretty happy with being about 3% above the S&Ps year to date. Let me know down in the comment section what you think of my trading accounts or any of the positions that I've taken going into next week. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.